Hello everyone and welcome to another episode of TA and Chill. No hype, no nonsense, just the brutal, honest truth every time, good or bad, whatever it is. So, had a few requests on Twitter to take a look at AMC today. So let's load her up and take a look. So we're going to start out on the daily time frame here. Where are we? Okay, post market we're at 29.88, so a little bit up in post market there. The drop on the day here looks to be 17-18% there, quite a heavy drop obviously. Let's stick on the Space Invaders and draw on some lines of support and resistance so that we have a point of reference here and see if we've broken or respected any significant levels. So let's start out with up there 60, 51, 45, 36. That should have been a double bottom there, but it doesn't look like it's held. Let's go back to the regular candles here, see how that looks. Alright, so this looks like a a lower low on the day than we set back on the 4th of August. And let's check the MACD. So, I mean, relative to the low at, what was it, $30, call it, on the 4th of August, at that point you could see that the signal and MACD, so the momentum essentially, was swinging up. So we were at a high, swinging low, 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 kind of a rounded bottom here and swinging upwards, and we respected that line in the sand at $30 there. The volume supported linear regression trend, not at all very many people use, but I quite like it because it's very simple. So you can see the trend upwards here into June, topping out at $60, $70, swinging low here into the summer lows there, up again into September, down into October, up again into November, and bringing us to the present day where it does look like we're having quite a hard swing down here. DMI wise, this is the directional. You can consider this to be the strength of the trend divided into its constituent parts. So in case you haven't watched a video before, you have DI positive here, so the strength of the positive trend, and you had a flash here back on, when was it? November 1st, that told you some volatility was coming in and it actually benefited the positive trend there. So that's the positive trend. The pink line, as always, represents the negative trend, and the third line that changes colours as it goes up and down is the ADX, or the average directional strength of both of those above lines combined. So let's break this down. So since early November here, you can see that it looks like the negative trend here has been increasing. So you were making higher highs here, like this, higher highs, but DI negative was making higher highs as well, and that's what's known as bearish divergence in the DMI. What you would have liked to have seen is DI negative going lower and lower, meaning that it wasn't running out of steam essentially. And what we've had, I'll just remove that, what we've had between November 29th and November the 30th here is this negative cross, and that was the point at which the bears took control. The bulls lost control of of price action here, and obviously you can see that reflected on the chart. As regards RSI, or the Relative Strength Index, here you can see, I'll just make that a little bit bigger for you. So what's been happening over the last few days? So the RSI has been decreasing, has been weakening. So if I just snap on a trend line here like this to show you the difference here. How should I draw this? Okay, well the point is that there's no bullish or bearish divergence, I think, going on there. Is there? No, there isn't. Okay, that's fine. But it's the point is that RSI is now in the bearish control zone, so it's below 35 on this indicator. Most people will interpret that the RSI simply as being in oversold territory, and that's not untrue. A lot of traders will treat it like that, but it's better to think of it as being the point at which the bears are firmly in control of something. And just because it is in the oversold territory, it doesn't, or it is in the bear control zone like that, it doesn't necessarily mean that it has to, you know, bounce like a ball immediately. It is possible for it to persist for a decent period of time, you know, within this zone here. And if I give you a previous something to refer to you previously, let's look back at we look back at maybe the December 2020, January 2021 back here. No, actually a bit earlier than that even. September, October 2020 here. You can see that it is possible for the RSI and for price action to persist in this quote unquote oversold state for a period of time. But that brings me on to a very important point before I put all of you to sleep. So this is what we're looking for here. Back in October 2020 to November 2020 here, if you see I draw on a trend line here, I'll just draw on a little trend line here so that you can see what happened there, right? So you can see that the RSI was making higher lows whilst price action was making lower lows. And that happened over the course of 2 weeks there. So you had 2 weeks of being, or even longer, being completely in the bearish control zone, price action decreasing, but you actually had RSI increasing. And that's bullish divergence. That's telling you that really, although price action is falling, the price is wrong. You know, it's not right. So to wind forward to the present day, although it looks, you know, let's not sugarcoat it, let's be honest, like this isn't looking good right now. What we'll be looking for in the coming days is some kind of bullish divergence to invalidate the bear's thesis here. I will say that it is pretty unlikely, whether it's just a dead cat bounce or not, it is unlikely to persist so low. I mean, it's quite rare actually for RSI to ever get that low. You'd have to go all the way back to October 2020 to see RSI below 17 like this. That's very, very unusual. So it does kind of speak to kind of broad panic in the markets. And if I was to load up, not AVAX, let's have a look at the. I was going to load up the stock heat map, but I'll leave it for now. I think it's. I think you'll get the picture. Basically, everything's red, so it's not just you know, AMC that is suffering today. So yeah, what I was hoping for today, even though you know today hasn't been good, I was hoping that we would respect this this point here at 29 or 30.05 approximately here. That's really what I would have considered to be, that really needed to be a bottom that needed to hold, because it invalidates so much of the kind of bullish hard work that's been put in since then. And in terms of the DMI here, I mean the bulls kind of had their shake of the stick here for a month or so, or even longer than that. The bulls have been in control for a good period of time, and it did push up, but maybe not as high as it could have. So I think I would expect to kind of continue. I would still expect a bounce, like maybe in the next day or two. I mean, I think you can see it even bouncing slightly in post market. Um, let's have a look at the daily time frame. I mean, in terms of the DMI, you would normally expect trends to start turning around at 38 point, approximately about 38 or 40, 37 here. It's quite unusual for negative trends to go higher than that. Again, you would have to go back until October 2020, March 2020. So it does kind of speak to the sort of COVID panic-induced selling that's going on here. So I think what we're looking for in the coming hours and days and sessions is evidence that this is an overreaction, that the market is panicking unnecessarily. So let's move those indicators for a moment and let's go to our favorite indicator, especially if you're watching from Asia. I hope there is an Asian audience out there. That would be awesome. But we're going to load up good old Ichimoku, because although it looks like an absolute mess on the charts, and I don't blame you for not wanting, you can just click dislike right now. If you don't like Ichimoku, you just click that dislike button right now, and I won't blame you. Okay, but just bear with me for a moment. So we'll just hide it there, and I'll try and simplify it just a little bit. Remove the lagging span. So really, all it is two clouds and two lines. Okay, red line, uh, what's it called? Kaijin Sen, right? Red line, that's medium term support. It's a 26 period median average, and then you've got Tenkan Sen, the blue line, short term support, 9 period median moving average. And we are looking for things called golden crosses, and we're looking for things called death crosses. And if you'll have been one of my loyal 12 supporters on Twitter, you would have seen me point out a couple of days ago that we did, and I was hoping that we would avoid this, we did suffer a death cross on November 22nd here on the 4 hour. If we go up to the daily, that was a little bit later. You saw the death cross on November 29th, but it was very borderline there. It could have bounced there. It didn't. Ultimately, it formed this kind of lightning bolt moving down there. So a death cross beneath the clouds is a stronger sell signal than a death cross above the clouds, like this, for example. If you were to cycle back to July, it was still a good time to get out of the trade, but you kind of had plenty of time. And I don't have we had any death crosses underneath the clouds since then? Had a golden cross. Whoops. Had a golden cross here, death cross here in the cloud. When price is within the cloud, that really speaks to kind of consolidation or indecision. So again, it's not quite as strong. You had a very weak golden cross there beneath the cloud, which really just speaks to kind of choppy price action like that. And yeah, unfortunately, we've had this last death cross here. So yeah, there was some warning that this was coming. And if you are listening to people on social media talking about fractals and stuff, I do urge people to be very, very careful about listening to that kind of thing. because of the dangerous logic of just looking at one area of price action and saying, oh, well, this thing looks like this thing and therefore it must be the same. And that happens a lot in the markets, and it happens a lot in price action generally. It's very easy to find one area of the chart that looks similar to another area of the chart and to just say that things are repeating when that's not necessarily the case, because although price action is very, very similar, you can wind back on other indicators like the RSI and you'll get a very different picture. So let's just, as a thought experiment, maybe we could just look for some differences between now and perhaps the previous cycle, as our friend Astro likes to call it. And there are marked differences. We could put on the moving average ribbon for one thing. I think that would be quite good. That's important. Let me just remove the indicators. Yeah, no, let's remove the drawings. There. Okay, perfect. Yeah, again, I'm really, really sorry if this isn't going as quickly as people would have liked, but I haven't got I haven't got a script or anything, so I'm just analysing it as I go along. So the difference between what's happening now and what's happening, or what happened, during the previous cycle. Uh, the first difference that I see is that in the earlier cycle we were respecting these moving averages, and if you don't know which they are, I'll show you here. It's the 20, 50, 100 and 200 there. Um, So we were really respecting the 20-day moving average here and the 50-day moving average, and being above the 20 and the 50 is just mega mega bullish. That's a really strong indicator that the bulls are in charge. Um, and we never even had to touch the 200 simple moving average. That's the longest term simple moving average that people will look at. Um, so when we compare that to this period of price action, much, much choppier, dropping through these shorter simple moving averages, dropping through the 50 moving average here. We have only been above it very briefly in the past couple of weeks. And yeah, let's be a little bit bullish on this, or let's at least give the bull case here. We are as low as we could possibly get without AMC breaking. Let's just be perfectly clear about that. Going any lower than this breaks AMC. There's not very much good that you could say could come of going below this 200 SMA here. This is really really important. So what we have to hope is that we do manage to respect this and that we get a hard bounce off this in the coming days, and that we don't persist down here, because the problem is that the longer you spend down here, the more justified the bear's thesis on AMC is, and perhaps even more importantly, is let's just remove price action so you can see this. So the longer you spend down here, the more significant these lines of resistance become. In the same way that if you spent a very long time above those areas of support, well, if you were above it, it would be support. So if you spent a long time above them and then you periodically checked in on them and just tap 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 tap, and it price action said, hey, this is okay. We're respecting all of these main moving averages. Then that becomes really, really significant. So what we need is to show that that there is still life in AMC, and that we get above. Let's go on lower time frames here. We want to get above these moving averages as quickly as possible. So let's turn that off for a second. We'll look at it with Ichimoku on the lower, 1 hour and the 4 hour maybe. Let's turn on the lagging span. As always, if you're not sure what the lagging span is, the lagging span is simply price action set 26 periods back. So if you're on the hourly chart, the lagging span is 26 hours back. If you're on the daily chart, the lagging span is 26 days back. So what's what could have kind of clued you in as to what was going on here and what was going to be the problem? Well, when you have a lot of sideways movement like this, yes, you had the death cross, but that doesn't tell you the full story. The other problem that we had here was that the lagging span was colliding with price action and crowding it out. And really, you want this lagging span to be free and clear. Like if you're in a bull trend up here, for example, if you were in a bull trend up there, you would want lagging span to also be, free and clear up here as well, like that, right? Um, but if we're in a bear trend, we're in a downtrend, um, we've pretty much got the picture perfect downtrend here. So you have the lagging span sort of evenly, nicely separated out from price action here, perhaps even quite a long way out from it. Price action checking in with the Tenkan Sen, the short-term resistance in this case, checking in, not able to break it, checking in, broke it a little bit, check in, check in, check in, check in, check in, tap, 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 not able to break it, not really even able to touch the medium-term support there. The only little bit of positivity that I could put in there is if you look at leading span A and B here, just draw your attention to the clouds. You can see that the clouds are looking quite thin on the lower time frames. How are they looking on the higher time frames? Let's go to the daily. Yeah, I mean that is quite a radical twist in the cloud. I'm not sure if that is sustainable, because you look for trends to be sustainable, whether they're uptrends or downtrends. And a 45-degree angle trend like this is textbook. But this is this is very, very strong, and I will say that the clouds are fairly thin here. So I mean, if we look at the DMI here, you can see that the negative trend, as I say, trends normally tend to turn around at 38 or 40, and you can see evidence that AMC is kind of maxed out on the negative trend here. It is difficult to kind of continue doing this in the short term, so I would expect a bounce tomorrow or so. We have to hope that the markets are just overreacting to things. Can look on even lower time frames and see what's going on. Maybe even put extended trading hours on. Yeah, so more thin, very, very, very thin clouds. So sentiment on this is not completely settled. I like to think of clouds as being a sentiment indicator. If they're very, very thick, then you can consider sentiment to be very, very strong. Here we've got, I mean, this is only on the 5-minute time frame. Maybe look at the 30-minute. These are quite thin clouds. So, AMC hasn't been trending that strongly in one direction or the other for a while, really. And this last cross here was kind of uh, the last bite of the cherry for it at the moment. Um, so yeah, it's looking like really, really tough times for AMC. Not going to sugarcoat it. As I say, looking at the moving averages, this is where this is as low as we can get without AMC completely breaking down. I don't want to see any lower than this. We'll have to hope that some of this negativity kind of fades off the MACD and the DMI over the coming days, and that most of this is proven to be kind of an overreaction. Let's take it in context of the OG meme stock though. Let's have a look at GME here, and because I'm not going to single out AMC. I don't want to just bash AMC on its own. I think everything's had a hard day, and GME is also in a textbook Ichimoku downtrend here. You can see like I like to think of them as nice little Japanese islands or like storm clouds. You can kind of imagine the rain coming out of it. Anyway, enough of that. So yeah, you can, yeah, this is a kind of a textbook downtrend. Is it sustainable? I mean, the cloud's fairly thick. I don't think the bottom is very much further down from this. Um, and what I think, I think my bull case scenario for AMC, and maybe this would be controversial, but like, I think GME's track record of explosiveness, shall we call it? Let's just turn that off. I mean, look at the crazy moves that GME has been having recently. Like, what is this? Like 50% in a day. That kind of volatility. Traders love volatility, so a lot of people, a lot of institutions, are going to be wanting to be trading GameStop, and I think that volatility and the fact that in people's minds AMC and GME are kind of interlinked with each other, volatility and positivity from GME is highly, highly likely to rub off positively on AMC. So, although technically, I mean, GME is not looking great at the moment either. I mean, like, again, let's be fair about everything here. You can look at the DMI here. You can see kind of another negative cross going in there. You can see MACD fading. Volume supported linear regression trend here also looking very, very weak. Not in the bear control zone there, but quite weak anyway. And obviously we're sitting on the support at 181 there. So will that hold? I don't think the indicators necessarily point to this being the bottom right now. Um, but the long-term bullishness on GME is highly likely to end up bailing out AMC one way or the other. I have a lot of love for AMC. I do. But it's important to be really honest about this, and I think we we need Big Brother GME to come along here probably and get people excited in the meme stocks again, and we'll just have to hope that the Corona thing has been kind of overplayed. Markets do tend to overreact to these things. March 2020 wasn't that long ago. We can have a little bit of historical comparison here. I mean, just imagine it's February 20th, 2020, and we'll just slap a ruler on here. I mean, what do you think that was like to sit through? 73% drop. You think today is bad? What did we drop today? 15%. You imagine sitting through a 73% drop from $7.50 down to $1.98. I imagine that was pretty brutal as well. So I'll probably call it here, but I'll just maybe I'll leave you with a little bit of hopium, or just hope, which is that AMC has been pronounced dead many, many times before, and so has GME. I mean, look at GME. I think GME went from, what was the crazy drop on GME? Let's bring out the ruler. So at its peak was something like, I don't know, $480. Imagine sitting through a drop of $480 down to, what was it, 40 by memory? Yeah, it was 40. It was a drop of 91.58%. And GME came back from that. So clearly there's some mechanism that is holding up these meme stocks and is definitely holding up GME. Um, you know, as always, don't risk more than you can lose. Please do. I guess if I could say, if I could like give if I gave one piece of advice, it would be to learn Ichimoku, because although it's ugly to look at, it is probably by far the easiest way of understanding how all of the different lines of support and resistance interact with each other. And what's so important about that is that you don't have to rely on the super chatters and the YouTubers, apart from me, of course. Of course, you can always rely on me. But apart from all of those, you don't have to rely on other people. You can just see the interactions yourself. So I won't talk your ear off anymore. I know this video has gone on for far too long, but if you did like the video, please feel free to drop a like. If you disliked it, drop a dislike. Even better than that, drop a comment below. Maybe hit that subscribe button. Obviously, donate generously. I'm just kidding. I don't want any money. And yeah, subscribe. I'll talk to you on Twitter. And yeah, thanks so much if you managed to make it all the way to the end, guys. I really, really appreciate it. All right, take care.